You would have thought we had a really bad week last week, but it turns out that we actually still held support on the 100-week moving average for the altcoin market cap, and we closed for the fourth consecutive week higher. Hey, what's going on, everybody? This is the Blockchain Backer bringing you the latest cryptocurrency news and analysis. And wow, we've got a lot going on in the markets today, all over the place. So we're going to kind of dive into a lot of it this morning, or wherever you're watching this evening, afternoon, whatever. It is morning here, but we are going to dive into all of it because we do not just have a wild day in crypto, we've got a wild day in the United States stock market. So we'll dive into that too and take a peek at what we see. This is the stock market is something that I've been talking about for several months, that it's in wave 5 of wave 5, and it looks like we are going to open here in just a couple of minutes. Down almost 1,000 points. So by the time I finish wrapping up the cryptocurrency talk on this video, we'll head over and look at the United States stock market, and that market will already be open. So we'll see what that will be. But let me just kind of recap what happened last week in crypto. This is the altcoin market cap right here. And you can see that we actually had a green week in the altcoin market cap last week when we closed higher than the previous week. So with how much volatility there was last week, you would have thought we had a crash last week because of how much madness there was in the comments and on Twitter and all over the place, that you would have thought we had a really bad week last week. But it turns out that we actually still held support on the 100-week moving average for the altcoin market cap, and we closed for the fourth consecutive week higher. So while we do have a start to this week in a little bit of red, there's nothing to worry about. We're still closing every week higher and higher, and we are holding support here. So we just need to see this play out for a little while and see what turns next. In my opinion, I still believe we're going higher because Bitcoin has not reached any type of Fibonacci level that would make me believe that it has topped yet. Let's take a peek at that right now. So here we go. Here's Bitcoin, and we could see that we have the golden cross on Bitcoin with the daily moving averages, with the 50 crossing the 200 back on February 18th, and we're just making this little bull flag right here. So yeah, I don't see anything to be concerned about as of yet. Looks fine to me. We also did not reach out to any type of significant Fibonacci level that would have been some type of rejection. Usually when we see a rejection, we see it from these particular levels. So to come out to here and that be the top, I don't think so. I really don't. I don't think you break out of all these moving averages, get a golden cross, hit a random non-Fibonacci zone, and then that be the top. I really do think this is going higher. I have no doubt. I have no concern about it whatsoever. I believe it's going to go higher. Once it gets up here, then we can start assessing what's going on. Do we get a hard rejection up in this zone, or do we continue going up? With that Bitcoin block having coming up, man, I just don't see any reason why we would really get a significant rejection in here. I do think we'll keep on going higher. As for XRP, we have the big moment occurring. We have the golden cross on the daily time frame. So this is fantastic. Obviously, we've had this before, but this situation is different. We have reached down for a 95% correction in this market, which we've talked about a couple of dozen times. So also back over here on the altcoin market cap, when we had the last golden cross, it was the suckers rally, which we've compared to the .com bubble over on the NASDAQ, and with the Wall Street cheat sheet, and also with Bitcoin in its last correction, that you do have two golden crosses at the bottom on the daily time frame. First one is for the suckers rally, and the second one is to kick off the bull market. I know there's that old saying that this time is different, but in this situation, compared to the last golden cross, it is. We had our suckers rally, we've hit our bottom, now we're golden cross, and every other market has told us that when you have this second golden cross, and when we're about to have over here this cross, the 100-day is about to cross the 200-day, we have started and jump-started a bull market. So let's go back to XRP, and we've got our golden cross, which is just great. And, I just see it playing out. I see it already. I know it. It's just going to go like this. Right back on up to 33 cents. Everybody's going to lose all of that worry that they had, and then we'll consolidate some more, and the worry will come right back. And then we'll just, play it on out, and then eventually break on out of there. But just give it just a moment. We're almost there. Remember, golden crosses don't mean that we fire up. And if you need to go back and double check my videos to make sure that I've remained consistent on that, I have. Just because we're golden crossing doesn't mean that the price fires up right before it, or right after it occurs. Typically, you could see a golden cross coming way ahead of time, which we did like 6 days ago. I was like, hey, it looks like it's going to occur on February 24th. And it's not hard to predict that. That does not take rocket scientists. You kind of just continue your line like this, and you continue your line like that. And then you can say, oh, it's going to occur like on Monday or Sunday or something like that. Sure enough, it does. Everybody can see that way ahead of time. That does not take a chart analyst to really figure that one out, just to be able to draw a line and see where they intersect. We can all do that. But what this does do is it tells, people who are trading to kind of potentially wait it out and wait to get it on the line. So when it comes down into this region, they'll grab it on the line and then set their stop losses right below it. But this is a buy signal. So whenever it comes down, I don't know if it's going to fire up here and then come down and touch it over here, but the buy signal will be on this line and they'll place their stops below it. So it's always tough as a content creator, especially a content creator who does chart analysis, to survive these red days, because people are very up and down in their emotions and what they write on days like this, but it does not affect me. I do appreciate the people who come out to defend me. That's fantastic, but it does not bother me at all. I've been around enough and have taken it on the chin for long enough to have gotten used to it by now. There are a lot of people who think they are geniuses who will write in the comments, and then I'll end up being right, and then they're gone. So it's just part of the game, man. That's just part of being a YouTuber. But otherwise, we just waited out for XRP, and we're going to be great. And here we go. The United States stock market has just opened right now, and it is down. The Dow Jones is down 980 points as of writing this. Let's see if we can get to over 1,000 points down before the finish of this recording. Who knows? It may find some initial market opening support. It is resting at the 100-day moving average right now. We'll see if it holds that or if it clears down through it. This is of no surprise to me. Just kind of been a wait and see for something like this to occur. And really, it just comes back to this. The United States stock market is in wave 5 of wave 5 on this 100-year chart that we're looking at right here. So these are monthly candles. And I wanted to show you this comparison because I've shown it to you before. And this is the perfect layout on it. This is on a log scale to see what a complete market cycle looks like and what a bubble looks like. On the right side here, we have Ethereum. It's perfect. And on the left side over here, we have the Dow Jones Industrial Average. And we could see every single level here on how it climbs up in this bubble. When we take it off of the log scale, you could see how the bubbles look. The thing is, on the United States stock market, we just don't have the crash yet. But it does look very, very obvious that it's going to be coming very, very soon. The thing is with it, though, is like if we look at over here at Ethereum and how long this took to play out, and we look how long would that take to play out on the United States stock market, this move right here in the US stock market would take about 20 years. So it's not something that you would see occur overnight or in a month or in a year or 3 years. We're talking long-term bear market for the United States stock market based off this structure. Now we could see that on each of these different levels that we have here. We can look here and here, here and here. But then the big telltale sign of it is that we're in wave 5 of wave 5. And you can see 1, 2, 3, 4, 5. And over here on this one, we have 1, 2, 3, 4, 5. Now, when we remove all those indicators and we still look at it just on structure times, I mean, you could see right here, these things are identical. Look at how they break out at the same spot. Look at this. We have these same structures. So eventually, this market's coming down to here, 4,000 points for the Dow Jones Industrial Average. Now, I realize it's a very controversial thing to say, and I will get comments saying, no, you're crazy, that's impossible, or blame some type of politician or anything. Look, I'm not going to pick either side on politicians. This is just the way things are. It's no single politician's fault, whether that's on the right or on the left. This is just what our system is. This is what it has turned into. Nobody has done anything to fix this. We have only made it worse and worse and worse, and there will be dire consequences to it. Because you could see this is over 90 years, right? This is not something that has occurred just in the very end of it, or, that the whole reason that this crash would occur would be due to the end here, or here, or here, or even all of this. The fact that we have done this structure and gone all the way up like this, it's just time. It's way overdone. I mean, you could look at this bubble. This is a bubble. It's going to happen at some point. We have 1, 2, 3, 4, 5. We're at the fifth one. Eventually, we've got to come back down here. Whether or not you like that, that's just what happens. That's what markets do. So the narrative doesn't matter so much, but we all know there will be one. But I've been positioning myself to prepare for it, right? I've been accumulating cryptocurrencies and gold and silver. If you look over here on this list on the right, what is up? There's only two things that are up today in this crazy market, and that is silver and gold. That's it. Everything else taking a beating. And I think that's what the future is going to be as well. But gold and silver are commodities, right? Wheat, corn, cattle, and cryptocurrency. Cryptocurrency is a commodity. So I don't know if this is the actual top of the stock market. I think we're just starting to see some extreme volatility up here. I think it could even go higher if it wanted to. It's really hard to pick the pinpoint top on these indexes because these indexes don't follow Fibonacci's exactly like asset, like cryptocurrencies do or like a single asset will. Well, an entire index does behave different, but there's no question we're getting there, and the time is going to come. And it's just whether or not you've positioned yourself properly. And anybody listening to my show is likely positioning themselves properly. If you're listening to this, you are likely long on cryptocurrencies, you're long on digital assets. And in my opinion, going into this, going into what's coming, I think that's the right place to be. Again, that's just my opinion, and that's how I'm positioning myself. Of my entire net worth, less than 1% of it is in equities or in the stock market. Now, I don't count gold and silver to be in the stock market, but everything else, so outside of gold and silver, regarding the stock market, less than 1% of my worth is in there. So as that US stock market starts to kind of wind itself down and start turning over, where do investors flee to? They want to continue investing. They want to keep the party going. So they have to find a different asset class where they can make money on it. Well, where do you go? You go to the other asset class that has finished a bear market and is ready for a new bull market. Cryptocurrencies are in that boat. You can see right here, like we've been talking about, we've been in a multi-year bear market and we are showing the beginning signs of a new bull market. That is also the case for gold and for silver. Silver has done a 10-year bear market and has broken out above all of the moving averages, found support, and it's getting ready to go. So buckle up. We've got our golden cross. We've got our confirmation of the bottom. Now we just wait. And I hope you're ready, because I know that I am. So all right, guys, thank you so much for watching this video. Please give this video a thumbs up. Give it a like. Please subscribe to my channel if you're not already subscribed so you can be notified of when I create new content and when I do go live. As always, this is not investment advice and I am not a financial advisor. But if you ever need a pick-me-up or a little bit of reassurance, just remember that the blockchain backers got your back. Have a good one.